Is Jason frozen? Yeah, all right. I think Jason's having some technical difficulties here, but welcome to Gold Rush Live, everyone. I am Sam Gatlin, an editor at ASC Gold Rush. Jason is my very esteemed colleague and co-host, and he will be right back, I'm sure of it. But we have a very, very special guest for you today. My my good friend Kashop is joining us today, and he is actually, we recently had Josh Young on the show, which I introduced him as one of the best fundamental analysts for oil and gas. But man, when it comes to precious metals and the stocks associated with it, I don't know if anybody's better than Kashop. Is that true, Kashop? Would you say that, or are you too humble?
Sam, I'm so flattered, but thanks for that. I like to think I'm one of the best, but you never know. It's like we were talking about, there are young analysts coming up every day, but little gray hair, little experience. So I think I have that covered.
Nice. So, Kashop, for everyone that's not familiar with you, why don't you introduce yourself? What's your background? How did you get into this business?
So I
Share
started
some
out
of
as
your
a tech
trading
guy.
stories if you want. What's your best trade? What's your worst trade? What did you learn from it?
Sure,
Things like that.
sure. So yeah, so like I had a typical corporate career. I did my MBA from a good business school in India and then got into IT, did 2 years in sales, and I was like, man, sales is just not for me. It's not that I wasn't good at it, I didn't enjoy it as much, and I was like, what's the opposite of this? And somehow I stumbled into finance. I started out as a equity analyst, analyzing Indian stocks, and then I got an opportunity to join this Canadian company and become a gold mining stock analyst. Completely out of the blue, but it worked for me. Did that for 5 years. And then me and Jason, we had been talking for a long time by then, and he was just transitioning to trading futures full time. So he taught me the ropes, and I was like, this is what I want to do with my life. So then I transitioned to trading. I've been doing that for 4 years. So I mean, I still do gold stocks, crypto, futures, the whole lot, but I have a strong background in gold stocks. So when this bull market started, I was like, I'm going to go pretty much mostly into this sector. So then I shut down everything else. And it worked well for me because I had like everyone talks about Bitcoin and crypto and how well that has done. But I was one of the first people to spot Solana, and I spotted it when it was $11 in 2023. And at that time, the sentiment was, oh, it's an FTX coin. It's associated with SBF and that whole fraud, and it's going to zero. And I was like, no, 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 this is good technology. This is Ethereum 2.0. So we have to buy it. And then I started buying it and pyramided and rode it all the way up to $220. Last November, when I said, this is it, there's now a substantial portion of my net worth and I want real cash. So I took it all out of crypto, put it into gold, and I've been riding the gold bull market since. So that's my story. And I think that's one of the trades that I don't think is replicable, but it just so happened I got lucky. I know I got lucky and it gave me my start. So I'm just happy for it.
And just a little bit more on your background. You said your first job was for a Canadian company, and was that strictly digging into like the financials and like what these companies were doing? You weren't really looking at charts. And are charts really a part of your process today, or are you
Charts
still?
are so every time you give me a ticker, now the first thing I do is look at a chart. And back then, when I first started working, every time you gave me a ticker, the first thing I would do is I would go to CDAR, which is the Canadian database, and I would pull out their financials. So I would start with the balance sheet, look at the income statement, and then look at what's in the technical reports because these are exploration stocks. So I would go into the technical report, see what the geologist has written about it. And that used to be my starting point. Now it's the chart and then on to everything else. If the chart doesn't make sense, then I just avoid doing the whole analysis. So I've changed that way. And I think it's great because if you don't use technicals, you don't make money. If you don't use fundamentals, you don't know how long to hold on to something. If you are sitting on a company like Apple, let's say, you don't want to sell it just because it's short-term bearish on the chart, because you know what the long-term value is. And the only way to get the long-term value is to know the fundamentals. At the same time, you see bearish patterns. If you deny it, well, you lose money. So you need to understand the technicals. So I think I came from a pure value fundamentals perspective, and I have appreciated the importance of technical analysis to such an extent that I can call myself a technician now.
That's
Yeah,
awesome. And there's a
it's
certain
interesting.
aspect of like respecting the market there too, right? Kashop, like a lot of value investors are very much counter trend investors. They're buying stocks that are in huge downtrends because of what they're seeing in the valuations or whatever. So, it sounds like you have a respect for the market, and if the price is going against you, you're not going to hang around for too long.
Yeah, I mean, absolutely. So like the April crash that we got. So at that time, I was catching falling knives, mainly because it got so insane. I just thought at some point it has to end. And if it doesn't end, then no issues. I'm just going to use a 3 ATR stop and get out. And as long as the volatility compresses, that stop is not going to get hit. So I'm fine. So I think there's a case to be made for catching falling knives. But if you do that all the time without really understanding what you're doing, then you're going to get wrecked.
So an interesting one, Kashop, you were one who was so against technicals for a long time. There was something that you and I used to disagree on constantly. And Kashop meets me, and I'm like a macro technician guy, and he'd be like, "I don't understand why this works." And then like I'm basically like we'd share our portfolios and talk about stuff. And then he finally like one day was kind of like sending me things that was charts, and I'm like, "Are you looking at charts?" Because he was so fundamental and so against technicals for a long time. But I think it's just understanding that as a trader, like the price action does matter because it's just a understanding of the psychology of the market at that moment. So I think it's really cool to watch you evolve into the trader you are now. And I see situations where you would in the past be very bearish on a certain company, and you could be fundamentally bearish on a company, but you'll say, "Hey, I don't know when a trend will end, so I'm not shorting it right now." And I think that's, the way to do it if you, especially if you're marrying the fundamentals and the technicals, that's how you got to do it to make money.
So I think
Yeah, I think,
that China is a really interesting example of that. Like there was no big fundamental shift in China. A lot of these companies still have problems. There's a communist government over there, but these stocks have been screaming higher because there's a mispositioning there. Investors are not allocated to these stocks.
so China has had a 10-year long bear market. Now, when you have a 10-year long bear market, then just a little bit of, there's this George Soros saying, right? The time to make money in emerging markets is when things go from extremely horrible to slightly less horrible. So if you have that, then you're golden. And China is not an emerging market, it's the number two economy, but still, I think that holds.
Totally. Yeah. It kind of behaves like an emerging market.
Yeah.
uh, yeah. So why don't we get into some of these charts, guys? Where do you want to start, Jason? Should we just start high level with what's going on in gold and precious metals, and then we can dive into the stocks? Or
Yeah, let's start high level and then we'll jump into some of these great charts that Shop brought, and we'll get into these exploration stocks and how to value them, how to trade them, and what exactly to do there.
totally. So slide number two, Gene, if we can. So this is a chart we look at every week at the gold rush. This is an equally weighted basket of precious metals. So it's gold, silver, and platinum, equally weighted together. And you can see that there was a pretty epic parabolic uptrend from the early 2000s to 2011, and it's been straight sideways since then, and we're just now reclaiming that 2011 peak, and what I think will be a brand new secular uptrend for precious metals. And then gold futures, I think, are going to $8,000. That's exactly what we saw in that secular bull market from 2001 to 2011. And, they've screamed higher since breaking out on March 4th of 2024. And they've been sideways here for a few months, but that's uptrend seems very well alive and intact. So Kashop, what do you think about that? Do you think about long-term targets for these precious metals? Do you think about it in these secular trends the way that we do, or where's your head at with just the
Oh,
underlying commodities?
absolutely. So I love trends. In fact, nothing nothing is as sweet as riding a long-term uptrend because what do you need to do? You just need to hold, and that sounds easy, but it's not. But if you have the mindset to hold, then you can just ride the entire trend. So I love these long-term trends, and I love it recent the fundamental factors that are driving the long-term trend. Now, you point to all the trends in gold, and you can see the distinct trends. So, 1980s to 2000s, there was a bond bull market. Gold did terribly, and then once you had China joining the WTO and you had the dollar debasement cycle. So 2000 from dot com to GFC, the dollar underperformed the other currencies, which means the dollar index fell. So at the time, you had a big bull market in gold, and then you had a long consolidation. Reasons for that are not clear, but since 2015, when gold bottomed, it's been trying to find higher lows, and then now, boom, it's just taken off. So I think, given the long bottoming process, which you point out, and the fact that gold hasn't really had a bull market in a long time, I think 8,000 seems like a very reasonable target.
Before we jumped on here, you were telling me about growing up in India, which is very much
Yeah.
a precious metals kind of culture there. So has any of that stuck with you, or are you just
Oh,
are you
absolutely.
biased,
Absolutely.
I guess
So
is my question.
oh, like most definitely. So, I mean, the first investment that I ever made was when I was working in IT technology. I didn't really understand commodities, precious metals, investing, none of these things. Like, I didn't even know about value investing, charts, none of this stuff. And I was like, I'm going to take my savings and buy gold because the Indian rupee is depreciating every day. Now, I know this because the news channels they used to have they used to have the chart and the price of the dollar, gold, and silver in Indian rupees, and I've been watching that every day when I was growing up. And in 2007, the rupee was at 38 to the dollar, and when I started saving, it was something around 50, and now it's something around 87. So that's like a steady drip, drip, drip of value just leaking if you're holding the rupee. So I was like, I have enough money in the bank. I don't need it for any big expenses. I'm going to save it in gold. And the very first gold coin that I bought, it was a 10-gram coin issued by a bank in India. And I still have that coin. And I'm never going to sell that coin because that is the coin that I look at to, really think of how far I've come in life.
So in India, you guys basically like pass it down generation to generation.
Yeah.
And that's a very
Yeah.
different thing from like the United States where we kind of, sell it all out before we die, basically use everything for retirement, maybe leave a couple bucks to our kids. But you guys kind of think differently, whereas gold is something that can last for a long time. You've also talked about, the fact that gold is a precious metal that can last a long time. Can you talk a little bit about the generational wealth that gold can kind of bring?
So the way Indians save is mostly they save in the form of jewelry. And the reason for that is one, the women in the family, they love to look pretty. And we have all sorts of designs. Like if you go to Signet or Tiffany or any other shop in the US, you will not appreciate the kind of designs that Indians wear. Like in India, it's a very common thing. You can just walk in with a rough sketch and you can go tell the jeweler, make this, and he'll make it. It's as simple as, and it's as commonplace as that. So jewelry is kind of like how people value tattoos. It's kind of like that. So everyone has a unique piece of jewelry, and the goal is to keep accumulating it and pass it either to your daughter or your daughter-in-law, and then they pass it to their kids, and then it just goes. And with each generation, the idea is to add a little more to it. And it also works in terms of the financial system because you can go to any bank and you can get a loan against gold. So let's say you're a farmer. Now, as a farmer, you don't have much of crop insurance. You don't have any of those uh, things that farmers in developed markets take for granted. So what they do is they go to the bank, they get a loan based on their gold at like 7% interest. It used to be just 4% interest, which is crazy because the inflation rate in India is like 10%. So you get these subsidized loans, and then you can just go take that and do your like sowing, planting, all that, and then in harvest season you pay it off. So that's a big part of the culture, taking these gold loans. And that's why the gold also lasts generations, because you don't really need to sell it. You can just take it to the bank, use it for working capital. So that's how it grows.
So everybody probably wants to get okay. So we're talking about long-term retirement stuff for old men like us these days. God, we're both kind of getting older, huh? We're talking about retirement, and all these long-term wealth ideas, and kids, and so on. But let's jump into the junkie stuff. I know Sam's always excited. I was saying the other week, it was probably 2 weeks ago or 3 weeks ago. I was like, probably now's the time to get really junky in the space. And Sam just kind of stopped and was like, "Whoa," because you know me, and Shop knows me even better than that, which is that's something that I would very rarely ever say. I'm a guy who's like, "Hey, I'm in the ETFs. I'm in the gold futures, silver futures, and so on." But now's the time to really get into these junky stocks. So let's bring up that cycle chart that you brought here first. So long-term cycle, let's look at this. So
This is so wonderful. I've never seen this before.
I haven't seen it before either. So, and I've been in the gold space a long time, and I'm kind of mad at Kashop for never sharing this with me. But no, let's talk about this. So let's talk about the junior exploration cycle, the explorer cycle. What are we looking at here?
Yeah. So uh, the reason this is the perfect time, like you said, to get junkier is so the gold stocks, like if you're talking about the gold miners, the big producers, the Agnico, Newmonts of the world, they make money and therefore they can be valued on a price to cash flow basis. And if not, they're going to issue massive dividends and they're going to make it into portfolios for that reason. So there are tons of reasons that the producers get valued just like any other stock during a good bull market. But for these exploration stocks, to make money on these stocks, you need two things. One, you need to see gold in an uptrend. But more importantly, you need to see speculative capital coming into this market. Now, if you look at 2022, it was a bear market overall. No one wants to take risk. They're not financing these juniors. 2023, same issues. It was kind of little better, but you didn't see investor capital flooding into this market. 2024, we saw some of it. 2025, we are seeing blockbuster deals. Now, the way you make money in this space is to ride both the equity cycle, which is liquidity coming into these stocks, and the commodity cycle, which is the gold cycle. So this is the first time in a long time we have got both of these, and they are perfectly in sync, which means that we have a long bull market ahead in these explorers. So when you're looking at an exploration stock as such, so this is the life cycle. So let's say you pick a really good exploration company. This is the life cycle that you should expect it to go through. So the first, it all starts with a geologist or a prospector having an idea. So this is the concept stage. So they're like, I found this outcrop. I like it. I'm going to stake some claims, run some tests, and see where it goes. And then they convince someone, hey, give me the money to drill a hole. This looks like a good place to drill. So then they drill a small hole and then they come out with the results and they're like, okay, this looks promising. And then on it goes until you actually have drilled off enough to call it a discovery, meaning you just plonk a hole, let's say take a placer mine. So, you go to Alaska, you pan the river, you get some gold nuggets, gold flakes. Is that a mine? Not really. It's a hobby. That's it. And it ends there. But let's say you find something that could be worth something, like you take some grab samples, is what it's called, like meaning you just grab some rocks and then you assay them and find out how much gold is there in them. And you get those, and then you're like, hey, maybe there's more gold lying in this area. So that's when you go from the concept stage to the pre-discovery stage. And then once you start doing serious exploration work, that's when you may or may not have a discovery. And once you announce that, the market values it pretty highly. So a good discovery on announcement, stock can pop 200, 300%. But so far, until this stage, it's too risky. This is not the stage in which you as a speculator should be getting in, mainly because unless you really know what you're doing, there is no way you can even understand. Like if you and I, we just go to some place in the Yukon and we grab a rock or, even chip at it and see some pyrite, we are not going to know whether that's pyrite or gold or anything else. Like I really cannot tell. But once it gets to the discovery stage, then you can start to see, okay, what could this be worth? And at that point, the company starts drilling more holes and they start putting out the assays on those drill holes. And then that's when you see the first big moonshot in the Lassonde curve, the 1 to 2 year discovery cycle. So the market gets excited, it starts putting pie in the sky valuations, and then like, oh, this could be a 1 million ounce deposit, it could be a 2 million ounce deposit. And then people start thinking, if gold is the 3300 an ounce and this is 1 million ounces, this mine is worth this much. And if they drill a little more, it's going to be worth 2 million ounces, it'll be worth this much. And then that entire hype cycle comes into play. And then what happens is, beyond a point, the more holes you drill, the value that the results get in terms of valuation kind of dips because investors lose interest. The first hole where you hit visible gold and you get 10 grams per ton over 2 meters, let's say, just as an example, that's going to grab attention. The 10th hole you drill, the 100th hole you drill, it's really good for your engineering, for your studies, but it's not going to attract as much interest because people lose interest. And that's where you get that stage where between discovery and feasibility, the first round of speculators, they take their money and they go chase the next hot thing. So this is also a period where the smart speculator can really buy bargains and wait, because at this stage what you have is for sure there is a deposit, meaning a mineable amount of rock in the ground, and for sure there is some value to it, you just don't know what the value is, and you're waiting for the company to do the studies to tell you what the value is. So at this stage these stocks don't trade as much, the volumes drop, interest drops, and you kind of get stuck with a longer holding period but with more surety of returns compared to the discovery cycle, because in the discovery cycle a lot more things can go wrong, and they do go wrong. For instance, you drill a hole and you find out that the core is lost, or you drill a couple of holes and they come up dry, and investors are like, oh, the first few hits were a fluke. There's nothing here now. So then they leave. So you have all these things that can go wrong, and the number of things that can go wrong reduces once you get to that orphan period. And this is the stage where the mine engineers and not the geologists are involved. So the first phase is all on the geologists. Now this is on the mine engineers. We have this body of rock, we have this deposit. What are the economics of it? Now, the economics of it can look very different at $1,800 gold and very different at $3,500 gold. The way you design the mine pit, that would be different based on different gold prices. So at this stage, it's all about statistical analysis, about doing your trade-off studies, doing your metallurgical testing. So all sorts of quantifiable things get involved. So here you get a valuation which is a lot more concrete and not just pie in the sky. So putting it in terms of, let's say, tech stocks, so you go from a stock which just has revenues and it looks like growth is infinite. And then at one point they switch and say, we are not going to grow market share anymore. We are going to grow profits. So when you get that switch, so getting to that switch is kind of like the discovery place. And once you flip the switch and you actually show the numbers, that's kind of like the feasibility development stage. And then the next stage, once you do your studies, is you need to find financing. So at this point, the royalty companies, streaming companies, the banks, the PE guys, or even the other big miners, they get involved. they fund the company, and then you have the development stage where you're just constructing the mine. And once you construct the mine, that's when you have your cash flow. And then it becomes easy to value the mine based on cash flow. So this is the whole life cycle. And then once the mine is in production, it has a life of say 10 years, 20 years. Beyond 20 years is kind of rare. So at that point, you have realized all the value on this particular company, and it's time to shut it down. So that's the a good discovery story can go through this entire life cycle. And the money is made in these distinct stages, the discovery stage and the orphan period, where you're betting on the development, and finally the producing mine itself. So this is the Lassonde curve.
No, I love it. That's it's a great explanation because I think a lot of people like, for me, I'm just like, okay, the market seems right for this type of period, but you finding the individual names inside of this is very important. And can we go to slide 14, Sam? So here's one that you sent me that said, hey, let's look at this one. And so tell me a little bit about this. So we see this move. I obviously saw since 2020, it moved up about 10,000%. Pretty
Oh, that's all
wild.
you have?
That's
10,000%?
just 10,000. That's it. So Kashop,
Good grief.
explain this and how this move exactly works.
So a company so this is a discovery to, this is the first part of the curve. This is not the second part, the orphan period. This is the discovery story that got everyone excited. So a lot of things came together here. First is they have an amazing deposit. And the second thing is Argentina as a country and Latin America as a whole became a lot more investor friendly, meaning investors wanted to invest in stocks in these countries. So NGEX captured the best of both of it. So the discovery cycle and the jurisdiction cycle. So that's the other thing about exploration. So you might have the best deposit, you might do everything right, but hey, if your deposit is in Venezuela or Bolivia, it's tough. It's not that it's impossible, it's tough. Whereas if the same deposit is in Finland or let's say somewhere like Nevada, it's easier. And that's just because of how easy it is to get your permits, to get running, to do all the things that you need to get from discovery to cash flow. So a company which gets the life cycle right, not just in terms of the Lassonde curve, but in terms of the jurisdiction and all the other things, you can have a hockey stick chart like this. And there are several such examples in the space.
I think something that's always funny is when you talk about like, hey, I sold my Bitcoin, and people are like, oh my God, why would you sell Bitcoin? You're crazy. And then they see moves like this. Like, I think this is what people miss is like, you're taking that money and putting it into things where you're finding this crazy amount of value. And you're one of the best at finding these things because personally for me, I don't know enough to find them. So, what do you think there's any more that are coming next? Are we early in this cycle? Are we late in the cycle? What are you thinking next here?
So gold bottomed in October 2022, but the real move started after October 2023. So now, assuming this is a 10-year long bull market, now if you look at prior cycles, it's somewhere around that, which means the first 20% of the boom is done. And there was this one famous trader who said, you can have the first 20% and the last 20%, just give me the meat in the middle. So the early guys, people like me, we have taken the first 20%. That's done. But there's still the remaining 80%. And that final 20% is when you will get the kind of parabolic move that you see in the NGEX chart. You're going to see that across everything. So you're going to see pigs flying literally at that point. So right now, the first 20% is done. We can capture the meat and a little bit of the parabolic move that's coming towards the end. So we have a long way to go, and we are going to find more such hockey sticks.
Kashop, you also brought along a chart of the TSX Venture Composite, which, as I'm sure you're all aware, has a lot of these very speculative mining stocks. So we see the technicals here. It's challenging that multi-decade downtrend line, but do you think this, first off, do you think this is going to break out? And are there fundamental reasons why you believe that other than, gold breaking out? And um, that going on. But are there some interesting fundamental stories here of companies discovering gold, things like that?
So this is the entire stock market. This is the entire venture stock market. So what you're seeing here is so firstly, go back to 2022. That was the point where volumes on TSXV listed stocks hit something like a decade low. Now, we were talking about China, about how China had a 10-year bear market and the only way was up. So the TSXV, it was something similar. And the reason trading volume completely dried up, the reason financing for companies on the TSXV dried up is because crypto stole the show. There was a time where all the speculative money that would have gone to gold mining, to cannabis, to all the stuff that trades on this exchange went into crypto instead. So you have Fartcoin with $1 billion market cap. So the speculators, instead of betting on junior miners, betting on cannabis, betting on all this stuff, they just went into crypto, and now they're coming back. And they're coming back because one, crypto, it's kind of played out. 2023 was a great time to be in crypto. 2024 was a okay time to be in crypto. Not too great, not too bad. 2025 has kind of been meh. If you have seen the long-term cycles, this is a very average year for crypto. Whereas if you look at what's happening in the gold space, in the commodity space, this is one of the best years in this sector. So I think to answer your question, this trend line should get broken. It's just a matter of when. And when it does, we are going to see investor interest coming back because, firstly, it's all a matter of liquidity. Now, the charts that you're looking at, these are the same charts that the smart allocators are also going to look at. And they're going to be like, hey, the venture composite index is picking up. We need exposure to juniors. And if they are junky, so be it. We'll just find a good ETF or a good hedge fund which allocates to the space and will give him the capital because we need to have exposure to this. And that's where it starts. And once that starts, then you're going to see this chart trip higher.
So when we're looking at these, where does silver kind of come into play and the silver junior miners and so on? Because a lot of people, when they are asking about these miners, they're always kind of asking us, what about silver? What about silver miners? How does this really affect the exploration stocks? Is this something that we kind of see silver really make a move and then we see the exploration stocks move? Or is it just kind of the speculative frenzy that happens late into the cycle? Can you explain that a little bit more? Because I'm sure people are wondering.
Yeah. So silver is kind of always this very attractive thing. So you talk to anyone who's into gold and they're like, oh yeah, silver has to move, silver has to cross $50, it has to cross $100, it's overdue. The only question is when. Now, some people may hate me for saying this actually, but the problem with silver is that silver is a byproduct of base metal mines and it's also a byproduct of gold mines. Now, when something is a byproduct, the miners aren't really keen to monetize to the fullest extent. They would rather use it as a source of financing. So in the previous cycle, in the 2000s, there was this company which called itself Silver Wheaton. And their pitch was, you want to build a gold mine, give us your silver, we'll do a streaming deal and we'll give you the upfront capital. Now that company is Wheaton Precious Metals, is one of the biggest players in the space. So the silver byproduct gets monetized a lot. And the other problem with silver is, one, China produces a lot of silver, and silver demand is tied to the solar industry because silver for photovoltaics, that's done because you no longer use your cameras which have the silver film. So that industrial use is gone, but now you have the solar use. So if solar picks up, then demand for silver picks up. If solar is in a downtrend like it is now, then the industrial use case goes down. And then you have the recycling market for it, which is also a pretty huge market. So there are all of these factors that go into the supply of silver, which is why silver, even though it should, perform and go up to 50, 75, 100, it hasn't yet. Now, when it comes to the silver miners, silver is a small market compared to gold and copper and the other metals that we typically look at. And when it comes to the silver miners, if there are 100 junior gold exploration companies, there's probably one good silver exploration company. just one. It's a tiny market. And the problem with the silver explorers right now is that a lot of them are in Mexico. And in Mexico, we have this huge uncertainty about whether open pit mines can get permitted or not. The silver bulls would say, oh, it's not a problem. They will get permitted, even though the government says they want to ban open pit mining and include ban in the constitution. And so there's a whole lot of issues going on, which makes it very, very difficult to get exposure to silver. So if you're looking for good silver juniors, you can find one or two outside of Mexico. There's a good one in Argentina. I'm not going to talk about it. And there are some in Bolivia and other jurisdictions, which again, it's like very difficult. There's one in Nevada, and there are a few silver companies which are mostly gold or 50-50 gold and silver, but they go with silver because it gives them that prestige and that premium. So you really, really have to be picky, or of course, now you have the option just buy the ETFs, but then take a moment to look through the holdings because you don't want to be caught in a situation where your silver mining ETF has all its stocks in Mexico, then you're putting all your eggs in one basket. One day there's a ban, and that's it. The ETF just tanks. So you need to be aware of those issues, but otherwise, just go with the ETF or just do your research.
So how do you think about that, Kashop? You know, the regulatory risk, because there is a lot of that out there. So when you see something like this situation in Mexico, you mentioned, do you run in the opposite direction as an investor, or you know, if there is a very attractive opportunity there, will you be willing to swing the bat, or yeah, how do you think about that?
Yeah. So the Mexico risk that I mentioned is just there are the known risks and there are the unknown risks. And the known risks don't get you because if there is going to be a ban on open pit mining of silver or any metal in Mexico, then the stocks are going to price that in because investors aren't dumb. They see what's going on. It's the unknown stuff that really gets you. And I have a list of the unknown stuff, which you only get by taking those arrows on your back. So there was this one company called Lydian International. They had a wonderful deposit in Armenia. They went all the way up the Lassonde Curve, were about to become a mine, and then they pissed off a local contractor. They didn't know that local contractor was powerful, but that guy, he organized the whole town, got them to block the road for so long, deny them access to the mine. Meanwhile, all their supplies, everything dwindled, their financiers backed out, and the company went bankrupt. Now, you could not see this coming. When a company says, we have an issue with a local contractor, you cannot see that as a mine ending issue, but it happens. And over in Nevada, a recent example, so 2022, so there's a particular type of weed, which is called a buckwheat weed, which grows only in lithium rich soils. And there was this company called Ioneer, an Australian company. They had a big lithium deposit and they saw that there were these weeds growing there. A local botanist saw it and he's like, hey, these weeds are so awesome. We have never seen them anywhere in the world. So it got the name TM's buckwheat. And then it got onto the fishery and wildlife protection, their radar, the forestry and wildlife protection radar. And then they were like, no, you can't mine here. We have to protect this weed. So it's like, could have been a multi-billion-dollar mine, but instead, because there's a endangered weed growing on it, now it's not a mine. And the other example is Pebble. So Northern Dynasty Minerals. So the last Trump presidency and this Trump presidency, this stock always does a moonshot right when the results are announced because this is a massive copper gold mine in Alaska, which would be a multi-billion-dollar mine, which can have a 25 plus year mine life, which is one of the rare beasts in the mining sector. And it cannot be developed because there are some powerful sports fishermen who are in the salmon fishing industry in Alaska who say no. And just like that, that project is stalled. So you have all these issues. And then there are non-threatening issues as well. So up in Canada, for instance, there are only some seasons where you can bring drills in because in the north you have logistical issues, the roads and the weather and everything. And let's just say at one of the times when you want to drill, there's a caribou migration going on, then you cannot drill because you have to wait for the caribous to cross. You cannot do anything to interfere with their migratory patterns. Then you have to stop. So you have all these issues. So the known issues, they get priced in. The unknown issues, you only hear about them once you have the arrows on your back. And I got tons of these stories. So there was this, right after COVID, there was this exploration camp. I think it was in Quebec. They had to shut down because their nurse quit. So every camp, because it's remote, they have to have a nurse on site, and the nurse just quit, and they couldn't replace her, so they had to shut down the camp for the entire season. So you just cannot really plan for all this. So the best thing to do is to buy a basket of stocks and hope none of the bad stuff happens, and all the good stuff like we saw with NGEX happens.
I love that because that's honestly the secret to like what you and I really do, which is like diversifying your bets. Like you don't know which one's going to win. So definitely diversify. Great question, Sam. I was literally about to say the same thing. Good job. So Kashop, before we go, we're going to just pass it to the audience, see if they have any questions on this. So if you guys have questions, drop them in the chat, YouTube, Twitter, wherever you guys want to go. We'll try to bring your questions up here. So anything, you're looking at to really say like what's the red flag here for the gold commodity cycle? Like, let's say we're seeing gold move up, we're seeing the miners moving. For me, I'm seeing everything I want to see to say this probably has legs. Is there anything for you that's troubling or something you're looking for on the horizon that could be a reason for you to possibly get out of some of these positions?
So tomorrow, Pavel's going to talk, and if he says that he's done, let interest rates find their natural level, he's going to dump all the MBS, all the treasuries off the Fed's balance sheet, take it back to where it was in 2008, which is $800 billion. And if he says no more, like a Walker Fed, but even more badass because of all the bullying by Trump. Now, if something like that were to happen, then immediately the dollar would get repriced and people would say the dollar is as good as gold. Now, an environment where dollar is as good as gold, I would not be buying gold stocks. I would be betting 100% on America. I would be betting 100% on the industrial revival of America. So in that situation, I would get completely the hell out of this sector. But I don't see that happening even remotely. It's like one of those things where you can say, for sure, this cannot happen. So I'm good.
I'm interested in how you think about gold priced in different currencies. Every week we're looking at, gold priced in yen, gold priced in rupees, things like that. Is that something you track to just, see the underlying demand for gold? Because, gold priced in US dollars didn't break out until March 4th of 2024. But before that, you saw every other currency in the entire universe break down relative to gold. So how much do you think about that, Kashop?
So when I was living in India, I used to actually do that because the reason being, as Indians, we are not exactly allowed to own dollars. I mean, it's very, very difficult to own dollars. It's difficult to own other currencies, but gold you can own. So when you have a lot of demand coming from countries which have some form of financial repression or capital controls, it's good to look at those charts if you are based in that country. But as a global investor, it doesn't matter. It doesn't, and right now it doesn't matter to me at all. So I just look at the futures price. I don't care about the claims that there are manipulation and all that stuff. The price is the price, and if it's in an uptrend, it's in an uptrend. If it's not, then you just have to position accordingly. You can have your theories. I would never completely say that I love the bullion banks. I love JP Morgan. I love everything that traders do, and I'm in favor of spoofing and stuff like that. But the price is the price, and that's what I trade. I have my opinions, but I don't trade those opinions. I trade the price.
So the question from Wavy, do you think NEM can be the outperformer in the S&P 500 this year, even outperforming Palantir?
It's a great question, Wavy.
But also
Yeah,
speak a
that's
little bit about NEM, because it's something you and I have talked about a ton. I know you've got a bunch of great research on that stock.
So Newmont used to be Newmont Mining, and then they acquired this company called Gold Corp, and then they became Newmont Gold Corp, and then the name was Newmont Gold Corp, which was just ridiculous. So finally, they just changed it back to Newmont. And the problem is, right after that, they just went on an acquisition spree. So the way Newmont's thinking at that time was, the GDX is getting a lot of inflows, and the GDX ETF is market cap weighted. So the best way to get a higher weightage and therefore higher liquidity flowing into your stock is to get bigger. So they did what they could to get bigger. And since they can't do it through growth, they did it through acquisitions. But bigger means more bloated. And after a point, they realized that all these assets that they acquired are underperforming or duds. Or Newmont actually ended up acquiring the biggest open pit gold mine in Mexico, and they had all sorts of labor problems there. So the unions got greedy because now it's a bigger company, you can shake them down more. So they had all these issues, and then a lot of projects that they acquired, they just couldn't make them work. They had so many issues that the stock was just a dud. And then they realized, okay, it's fine if we downsize the company, sell off some assets, as long as we are profitable. So now they are doing that. They are rationalizing. So if they are successful at it, then great. There's going to be tons of money for buybacks. Plus, now they are left with the core assets which are working well. So it has a good future, but investors are not going to be so quick to forgive the mistakes of the past. And if Newmont does another acquisition, then investors are really going to get jittery. So if Newmont management is listening, please don't make any other acquisition and just focus on what you're trying to deliver. And if they do that, then yes, it's going to be a great stock. And if Palantir has a down year, which I think is likely at this point, because they're just too ridiculously valued, like $4 billion in annualized sales and a $400 billion valuation. Like, come on, that's impossible. So yes, I think it can. I think it can. But then even if it does, you should be looking at other stocks and not Newmont right now. You should be looking at, let's get junkier. That's the theme today.
No, I completely agree. So, Sam, do you got anything else? I think I'm good. I think that was great. It was a phenomenal masterclass in understanding how to get junky in the gold mining space.
Totally, yeah. We need to have you back on here, Kashaf, because you have a lot of wisdom to share with us. We're not really digging into the fundamentals of these companies. We're strictly technicians around here. So to get the other side of these stories is truly invaluable. So thank you very much for being here today.
Thanks, Sam. I would love to be back. Thank you.
Cool.
We'll
Just
definitely do that.
before we wrap, where can everybody else find you? I know your Twitter handles on there on the YouTube stream, but is that the best place to find more of your research?
Yeah, I'm on Twitter. I'm on Substack. It's kashyapsriramresearch.substack.com. And I also have my own website where I run my newsletter. So it's myname.com. So kashyapsriram.com. So you can go there. You can check out my newsletter. It's $150 a month. So feel free to just, give it a try. I talk a lot about gold mining stocks, but there's also a ton of other stocks in there. So I got the rare earths uranium move, the MP materials move that everyone's talking about. I caught it in a smaller mining company. So there are a ton of good ideas. So do check it out.
Totally. Yes, everybody go check that out. And we'll wrap the show there for today. But thank you all for being here at Gold Rush Live. We will catch you again next week at the same time, same place. For now, adios, everyone.
All right. See you later, guys.
Bye, everyone.